Hello, thanks for tuning in. This is the ASX and Sectors weekly chart analysis for the week ending 20th of January 2023. First chart is the parent index of the ASX. This is the XJO, the S&P ASX 200 index. And as you can see, this week's bar was almost average, perhaps just a fraction under average, and volume increased to average. That might have been a little bit higher due to options and futures expiry day this week. So it was perhaps just a little bit inflated above what it might be. We're not quite back to normal trading levels yet, but we're getting very close. I expect that'll happen next week. Now, perhaps the most interesting thing is that the market is getting up close to the true breakout level, which I'll mark in a sec. Here, any push above this level really is a true breakout into clear air. There's very little supply that will be coming from the left at this level and higher. So this is an interesting level to watch. The market's looking quite buoyant at the moment, pushing up for 3 straight weeks. No testing for supply below the previous close in the previous 2 weeks whatsoever. And there's no obvious sign of supply at the moment. This week's bar was a fraction narrow in spread, but not enough to be concerned about, and volume wasn't excessive. I would expect there'll be a little bit of work needed to be done around this level. A successful push above 7,500 would be a clear breakout on this chart. The mid-cap sector's next. The mid-cap sector is comprised of the bottom 50 stocks in the ASX 100 index, and this market isn't trading quite as strongly as the XJO, the parent index. The highs of the range is probably up here. It's not quite as clear on this chart, but you can see the parent index is already up to this level and moved past it, and this market isn't quite there yet. Spread did narrow this week. Volume was a little below average, so perhaps a little bit of supply has been encountered, but at this point it doesn't look like it's a real concern. There may be an early test for supply next week prior to any further push higher, just to check whether there was increased supply being drawn out. Next is the small ordinaries. The small ordinaries are comprised of the bottom 200 stocks in the ASX 300 index. And you can see how compressed this market is compared to the other two. The mid-caps are at this level or just below it at the moment. The parent index is up at this level, and the small ordinaries are lagging behind to some degree. Now, spread was very narrow this week, and volume did increase to just below average. So it does appear that some supply is being drawn out here, and you may get some sort of test for supply early next week. Then the market will trade in response depending on how much supply is drawn out. If supply is found to be low, the market may attempt to push higher. And if supply continues to be drawn out and becomes an issue, the market may push lower and challenge those sellers, at least to some degree. The ASX financial sector has moved up. Now you can see this is where the XJO is just challenging here at the moment. It's just popped up to this level. So this market's a bit closer than the previous two, the mid-caps and the small ordinaries. It's pushed past this pivot here, or it's at least trading adjacent to it. There is a bit of a gap still to this breakout level above. The market pushed higher with reduced spread, but almost average, and volume was actually reduced, slightly lower than the previous week, and a little bit below average. So no serious volume anomaly there. And while the market was not particularly strong this week, there was no serious or obvious weakness in the market either. Next chart is the miners. This is the ASX 300 metals and mining subsector. Now, I've mentioned a few times in the past, This is one of the few sectors where there's obvious accumulation in the background, and you've got intent here with a gap out and push higher. This is exactly what you want to see. And then the market has since moved up. It's gone through a period of consolidation and it's accelerated higher and broken out again. This is a really good sign that the market has ongoing strength behind it at the moment. This week saw the market test for supply for part of the week and was strong enough and was able to absorb any supply that was drawn out. That allowed it to close higher for the week. The lack of selling pressure and the confidence in the market to absorb what supply was present allowed the market to close as an up bar for the week after spending what appears to be a reasonable period testing for supply just below the previous close. Next is the ASX gold sector, and this market also has accumulation in the background, a nice gap out to show you intent, and this period here could be considered bullish absorption, or you could draw it as two periods of consolidation, a push higher, consolidation, a push higher, and now the market's that bar there. If we put a tail on it, it makes it look a bit more clear. That's what that bar really looks like. It's a bit messy. And this week, similar to the metals and mining subsector, went through a period of testing for supply, consolidation this week, before closing slightly higher. Now, volume did increase considerably this week, so there was some supply drawn out, possibly some profit taking from the below. I'm doubting that it was shorting, but you never know. And there's some chance there was some supply emerging from the left from people who may have been trapped over here. So we'll just see how that goes next week. I would expect in response to that an early test for supply again. And if the coast is clear and volume is relatively low, then a push higher in response later in the week. And if supply is ongoing, you may get price coming back to test around about this level, challenge the sellers and attempt to absorb them at a lower price. The ASX energy sector has had a couple of chances to break out recently. I really thought that it was going to break out here. I called it to say it was going to break out here, and it failed in this December pullback here. But price has pushed up to this level again and appears to be challenging this breakout line or the highs of the trading range. Volume increased to about average this week. Spread was just a fraction below average, which is probably understandable as it pushes through this level where supply has been encountered previously. Now we'll see what happens in response next week. A continued push higher would suggest there is intent in the market and the market may all start working together and push up. We'll just have to wait and see how the market responds. It's failed previously at this level and it's failed previously here back in November. The ASX healthcare sector has also failed to break out recently. I expected it was going to break out here when price pushed above this level, but it failed. This is where supply has been encountered recently and the market pushed up but never really seriously challenged the level last time. This is the December pullback and prices moved up to this level this week on an increase in volume to about average. The wide spread shows you that there was very little selling pressure in the market and that allowed price to push higher with relative ease. So the market's in the position now, it's poised to challenge this level. A push above 4,400 would be significant. That's a clear push above 4,400, perhaps something like this. And then in response, you may see either a continued push higher or a test of the breakout and then a push higher in response. At the moment, we'll just see what the response is next week. You may have an early test for supply like this, perhaps through the first couple of days next week, and then a response depending on how much supply is drawn out. If supply is light, you may see an actual challenge to this zone above, and if supply is ongoing, you may find price moves back to challenge the sellers. The ASX industrial sector has certainly failed to break out numerous times previously. It's been a serious disappointment. Now, price pulled back in early December on very, very low volume. This was Christmas week, if I remember rightly. It was probably not due to pull back with that amount of spread, but there was an intense seller in the market with very little buyers present, and price had to stretch lower in order to find enough buyers to satisfy that seller. And that caused price to really push lower. In response, prior to New Year's, the market recovered and pushed back up over 2 weeks to this minor breakdown line. And prices gapped up this week. That bar really looks more like this. That makes it look a bit more clear. So price is back up to these levels. That's the minor level. This is the longer term level. You want to see what price does if and when it can get up to here. This is where the supply has been drawn out previously, and this market has failed to break out previously. Back to the XJO, which it hasn't been the strongest chart out of the series for a while, but it's currently acting stronger than pretty much all the other charts. And that's a good indication that the very large cap stocks in the ASX, which dominate this market, are trading really strongly at the moment. I expect this market will spend a little bit of time early next week testing for supply. It's right up at this important level now. So you'll get something like this early next week. And then it will depend on how much supply is drawn out as to whether price really challenges this level or whether the pullback continues. And it will also depend on the overseas markets early next week and overnight on Friday night. If they pull back considerably, this market may just trade sideways just at or below this important level while we wait and find out what those overseas markets do prior to any serious challenge to this level above. Okay, that's my lot. Thanks for your time. See ya.